Srimati Latha Venkatesh began her career in CNBC TV 18 as chief of the Mumbai News Bureau. Over the years, she has come to be recognized as one of the keenest watchers of Reserve Bank of India and a respected commentator on banking sector issues, money markets, and macroeconomic trends. In 2010, she was conferred the Ramnath Goenka Award for Excellence in Journalism for her coverage of how central banks tackled the Lehman crisis. She's been a business journalist for 30 years and has specialized in covering all markets, stocks, currency, debt, commodities, and she has also had stints in all major streams of media, having worked in Economic Times and Dow Jones Newswire for 5 years each. She graduated in economics and politics and has a doctoral degree in political science. Along with Joined by her on the panel, we have Shri Kamath. He's a veteran banker. He started his career in the 1971 at ICICI. He then moved to the Asian Development Bank and spent several years in Southeast Asia before returning to ICICI again as its managing director and CEO in 96. Post its merger into ICICI, he transformed itself and diversified technology-driven financial services group. In 2015, he was appointed as the first president of New Development Bank set up by the BRICS countries. He has also served as the chairman of Infosys and the National Bank for Financing Infrastructure and Development. Currently, he is the chairman of Geo Financial Services. Mr. Kamath has been awarded the Padma Bhushan, which is one of the highest civilian honors of Bharat in the year 2008. Our third panelist on this session, Shri Dinesh Khara, the ex-chairman, State Bank of India. Shri Khareji has served as chairman of SBI, which is the country's largest bank, from the October of 2020 to August 24. Joining SBI as a probationary officer in 1984, he accumulated extensive experience across all facets of banking. During his career, Mr. Khare has held several key leadership positions in various verticals such as banking, risk compliance, and subsidiaries as MD and CEO of SBI Mutual Funds. He managed a pivotal role in managing SBI's subsidiaries, including SBI Cards, SBI Mutual Fund, SBI Life, and SBI General Insurance, gaining comprehensive insight into the financial sector. Notably, he spearheaded the seamless merger of 5 associate banks and Bharatiya Mahila Bank with SBI. This has been a landmark achievement in Bharatiya banking. Shri Khare is a postgraduate in commerce from Delhi School of Economics and an MBA from FMS New Delhi. He is a fellow of Indian Institute of Banking and Finance and is passionate about reading and very keenly interested in using analytics and technology to make banking simpler and bank finance easily accessible to all citizens. A big round of applause to all our sessions, and now I hand it over to Srimati Latha Venkatesh to chair the session.
Thank you very much, Lisa. Well, the topic given to us, Bharat's Banking Revolution, Inclusive Finance and Digital Innovation. You will have to say that over the last, 5-10 years, on both these aspects, financial inclusion and digital innovation, India has taken strides that has left the rest of the world far behind us. For instance, of course, on digital innovation, I need hardly say what comes to the mind of everyone, the UPI, or the Unified Public Interface. Now, that one innovation has made the entire credit card industry look like, last century. It's such an extraordinary innovation that it is at once encompassing all the citizens of India. So in terms of digital innovation, we've done extraordinary things, and I'm just naming UPI as one of the grandest achievements. We will have many more to speak as we proceed with the conversation. And likewise, inclusive finance. Inclusive finance took a quantum leap when we started Jan Dhan. Until then, perhaps India was 50% banked. Now we are 90% banked. And that credit, in a large measure, goes to State Bank of India and to people like Mr. Khara, because they shouldered a large part of the spread of banking. So just these two institutions, Jan Dhan and UPI, have completely scaled up both financial inclusion and digital innovation in finance in India, but these are only starters. Now, the pattern I thought I would follow is to first ask my two guests to say what they think in terms of prospects and what they think in terms of problems, and then we can have a Q&A. And I would start with Mr. Kamath, not the least because I think Mr. Kamath is a new high in financial inclusion, or perhaps the first one who actually made India look like finance is not restricted to foreign banks. I remember I started my career in CNBC in April of 2002. And do you remember, sir, what was that day important for? I think it was the day when the ICICI board came down and ICICI Bank went up in BKC, and I was there as a reporter to cover that. At that time, I was coming from Dow Jones Newswires, a foreign company, and I had a foreign bank account. The salary was paid through HSBC, so we were given a credit card. I hardly ever used it because it was not that much of a culture. The credit card culture was restricted to probably 0.01% of Indians, and it was very, very elite. Mind you, one of the first big stories I did in CNBC or CNBC TV 18 was how ICICI had completely decimated the entire foreign bank credit card structure. In a matter of 3 years, the foreign banks were not as much in the credit card business. There was just a dominating presence of Indian banks and particularly of ICICI. So the retail expansion of every product, I'm only referring to credit card as one example. We did have HDFC in home loans, but ICICI had spread home loans as a culture just across the length and breadth of the country. So the person who first told us about inclusive finance in a retail sense was ICICI under Mr. Kamath. So Mr. Kamath, that was one phase where you took a whole lot of products, ATMs, credit cards, small things which was still a luxury in the late 90s to all India levels. What is the next quantum leap?
Thank you, Latha, and I'm honored to be here with all of you to share my thoughts. I think to answer your question, I will just look back for exactly 1 minute. So what drove that drive to draw all the effort to include the retail customer in our embrace? I think it was opportunity. That was India just happening. 1996, per capita income in India was about $250 or $260 was in 96. And you could foresee that it was going to improve with all the opening up that was done. And what I had seen in Southeast Asia, my sojourn there, 8 years that I spent there, was around $500 to $700 per capita income. People's aspirations change. You want a home, you want things to put in your home, you want a motorcycle or a car, you need better roads, you go to a mall, you pay by card. None of those really existed in India. So, but we thought that this aspiration class is going to come up. And we took a bet on that and started building right from 97, 98 for this. And by 2004, actually our per capita income hit around $500. And that's when everything started, taking off at a faster rate. And of course, because we were constrained by not having branches, we put in technology. So the technology induction and this opportunity that came up set the momentum. So that was the past. I said 1 minute that I spent on the past. Looking at the future, now you take a cut today. If I talk of overall GDP, let's say we talk of the country's GDP at 4 trillion. I'll round it off from slightly less, slightly more. My expectation is that the rate that we are talking of growing, we should be able to double this GDP in the next about 6 years, maximum 7 years. So we're looking at an 8 trillion GDP, estimates of a 10 trillion GDP a couple of years later, but let's stay with 8. But to me, when you move from 4 trillion to 8 trillion, you just don't double the GDP, or you don't just double the aspirations. The aspirations increase, I would say, fourfold, and the infrastructure need goes fourfold. To meet that aspiration, you will need to produce fourfold. So everything becomes at a different scale and order than what we are used to today. The mistake we are making is we still think that, oh, but GDP will double, so if we double things, no, we will again fall short. So I flip it. Fall short. Why should it fall short? So you create for that tomorrow, whether it is the bank, whether it is the product that the bank will provide, or if you are in the manufacturing business, your product that this new aspirant will buy, or the infrastructure that you will need. Just take a look at the increased infrastructure that we have had in the last, say, 5 to 6 years. If you physically can't travel and see the road network, go on YouTube and look at the bloggers who have covered north, south, east, west of India. And the best bloggers to see what has happened on the road side of the infrastructure is not a travel blog, but it's a lorry blog. Try to figure out a truck blog where the trucker blogs and takes you all over the country, and you will see what is really happening. Not only on the road, you will see what's happening in the daba, the way the dabas have come up. You will see what's happening in the fields, what they are growing, the diversity that is coming up. I mean, it is an education by itself. So things are happening at a pace where we living in the cities are not exposed to. And of course, it's difficult to get a snapshot. I'm again putting this in context because in the next 5 to 6 years, all this will quadruple. So that to me is the new India, and that to me is what new Bharat, and that to me is what we have to prepare ourselves for as banks. And that is a huge opportunity.
So I will come back to you in terms of the digital opportunities over there. But Mr. Khara, I want a slightly different spin. Now, while we have ICICI in 2001 or 2002 precisely, showing us how the retail credit or how the retail inclusion would come by, that was still the top 20% of India. Even today, that the credit card culture or the home loan culture envelops the top 20% of India. But who takes care of the bottom 80? How many Jan Dhan accounts we have today? I went through the PMJDY account just before coming. 54 crore accounts. And of that, how much to the public sector banks contribute? Take a guess. Anybody? Out of the 54, how much comes from the public sector banks? 52 crore comes from the public sector banks. And out of that 52 crore, I think 33% comes from State Bank alone. So that is something like 15 crore accounts. It's not laughable. I mean, it would be like the population of Europe or something like that. It's a large number that we are talking about. So technically, although the advertisement says banking to every Indian or banking to the next Indian, that exactly is what State Bank has achieved. And to that last Jan Dhan account, a RuPay card is available. And if that person is savvy enough, he or she can transact on GPay. And I must tell you with some pride, Mr. Khara, the lady who cleans my house, she's from Calcutta. Children are still in Calcutta. And she takes the salary only in GPay, because she can send it to the children quickly. And there are still people who pay her in cash, and she comes and tells us, aap cash leke GPay kar do na. Because that is what State Bank has been able to achieve. And incidentally, a State Bank of India bank holder. So I wanted to ask you the prospects that you see in terms of inclusion. You'll have achieved a lot. What is the next that the Indian banking system must achieve in terms of inclusion?
First of all, thank you very much. Am I audible? First of all, thank you very much for giving me an opportunity to be here among all of you. Well, Latha, what you mentioned in terms of the opportunity, I think sky is the limit, if I may put it like that. Because why I'm saying that, when we started opening these Jan Dhan accounts way back in the year 2014, they were all zero balance accounts. And nobody would have imagined that it will actually help in channelizing the savings of the common man in the country. And today, the average balance in these accounts goes as much as to 4,000 rupees. So very clearly, when we talk about the inclusive growth, this is something which is very, very important. When we can channelize their savings, and the next step is that if at all we can extend them the credit. So naturally, those who have got the savings flowing into the account, we have got some kind of visibility of the behavior in terms of the ability to absorb the credit, and that is helping us in terms of extending credit also. If I may add here, this is another revolution which has happened, which probably is not being observed quite a lot, is essentially when we started lending to the street vendors. You know, when we started lending to the street vendors during the COVID period, that was a point of time when probably it was a felt need. You would have observed when you go to the street that they are all having a QR code and also a box which actually speaks that how
Voice
much
box.
money, voice box, which actually speaks how much money they have received. So the next revolution is going to come from there, because based upon the kind of credit which is flowing into their account, they will be entitled for availing the credit also. And also, if at all they're in a position to maintain that credit discipline, you can very well imagine they are actually recipient of credit, which will help them in growing their awareness. So this is what when it comes to the bottom of the pyramid. Well, when we talk about India, we talk about ambition, we talk about aspiration. I think we are all privileged to have taken birth in this country, and it's at this point of time. For the simple reason, I would say, the kind of growth which you have seen in this country cannot be matched anywhere. We were about $1 trillion economy. Today we are about $4 trillion economy from 2014 to 2024. And we are adding every 3 years, we are adding $1 trillion. Earlier we added $1 trillion in 57 years. The second trillion came after 7 years. Now the pace of adding to the GDP it has got accelerated, and we are quite hopeful that we'll be 7 trillion economy by the year 2030. So that is one aspect of it. The other aspect is that what Mr. Kamath was mentioning in terms of the per capita GDP of about $500 in the year 2000. Today we are at 2,800. And our ambition is to become at least $13,000 per capita GDP by the year 2047. And to my mind, it's a reality. Why? Again, I'm giving another statistics. See, when it comes to the deposit base, for the banking system as a whole, it was about 75 or 70 trillion in the year 2014. Today, it is about 200 trillion, 230 trillion. So, and I did some calculation. If at all we have to be into the league of the developed nation by the year 2047, then this deposit base has to go 10 times more. 2,400 trillion is something which is required. And we have actually seen this happening in one of the sub-segment of the country, which is in the mutual fund industry. I give you one example. In 2014, it was 12 trillion industry. Today, it is 68 trillion industry. So just in 10 years' time, this has happened. So the only thing is that we have to see that we have to provide the rails through which we are, as I mentioned, that one of the most important lever which has taken place is the bottom of the pyramid, where we have started channelizing their savings. Now, when we are in a position to extend them credit also, it's always, the credit will lead to the deposit creation as well. The multiplier effect will kick in. And that's how we'll be in a position to reach the numbers which I have just indicated, $2,500 trillion worth of deposits and 2,000 odd trillion worth of loan book, which will happen. And I think, to my mind, it is certainly a reality. And why? Because how the GDP will move up. GDP will move up because the kind of new levers of growth which have come into the economy. And those new levers of growth are renewable, EV, semiconductor, defense manufacturing, and also our effort and endeavor to become a major manufacturing export economy. And on the top of it, when we have the call centers, which used to be call center, now they will become the global capability centers. So this is something, these are some of the things which to my mind are the levers of growth, and these levers of growth will propel this country into a developed economy by the year 2047. That's what my belief is. Thank you.
I think the stock market has recognized these levers better. Sometimes you don't see the what you call legacy stocks moving, but exactly what you said in terms of renewables, EVs, or e-commerce, those stocks are all flying. So clearly, growth is happening, but where probably we are not noticing. And it's paradigm shifting growth. Speaking of paradigm shifting, Mr. Kamath, you've always been a visionary when you're able to see how innovation comes. So can you just let your imagination run as it normally does? I was thinking of something very small. One of the big things that convenience does is GPay and UPI. The other big thing that has suddenly made us sit up and make life so much smarter or so much easier is DigiYatra. I mean, we always stood at queues and, there were people trying to check your Aadhaar and you're looking at your face and your spelling. And now you just walk in. Mr. Kamath, one of those examples. I mean, is KYC about to become as simple as GPay? And any other innovation that you see, which is so inclusive and so different in terms of ease of doing things?
I think, Latha, what you say is on us. It is happening daily. And even if you look at a bank's app at one end, and you look at food delivery app, quick commerce, you said, take a Swiggy app, the evolution over the last 3 years, you as a customer are finding it much easier to deal with. And you quoted DigiYatra. So it's in the nature of this revolution that that we will leverage that to the fullest in India, because for 2-3 things, I think we have proven ourselves in the last 3 years that we can A, innovate, and B, the user is willing to adapt and adapt at a great pace. Now, I'll go back again for 30 seconds, something you said. You pay your household help through GPay. But the Jandan impact and State Bank's impact, I'll give you a absolute clear first-hand example. COVID hit. That month end, I had to pay my household team. They were somewhere in Jharkhand, and there was no way they could go out and make that remittance. And I couldn't draw the money. So I asked the gentleman, do you have an account back home? He said, yes. Which bank? State Bank. Do you have the number? He said, yes. I said, I'll make an online remittance. And I did an online transfer, and he was astounded. So I asked him, what are you doing so far? I would withdraw money, then I would go to a dukan. The dukan, I would give him money. He charged me some commission, then the money went there. Then my family called me and told me that money came. But all along, they had a State Bank account opened probably during 2014 and not using it or dormant because the process was not set. So what I'm saying is, once you set a process, then mass
when
India
the need comes,
is able to very quickly adapt. So you should try to ask your household help, do you have a State Bank account back home? And then try to remit directly from your transfer app to that account. But coming back to this, so what next? To me, there will be 2 or 3 things, I think, preconditions. Precondition for whatever would happen next, one of the key preconditions was the banks should have been clean in terms of NPAs and their problems, and have the ability to grow. Now, you look at the banks today, I have never seen in my 54 years banking career, banks as clean as today.
2.3% GNPA for the
And
sector.
no, you look at net non-performing assets. Now, finally, because it has been provided for, large banks less than 0.5%. We are in a dream world. But yes, the banks have cleaned up. Now customers are paying. How does the bank get clean? Because the customers are paying. So you have a situation where you have a banking sector, and it means that they have the ability to grow. Again, let me stay with the top three banks in the country today. Their ROE is between 15 and 20%, and maybe 18, 19%. I always round off to the more convenient number. But again, never seen before. And I call banks today a perpetual cycle engine, because they don't need any fuel, they don't need any addition of capital. They will be able to grow at a pace to meet the aspirations of India through their ability to take in deposits, lend, and so on the basis of their ability to generate profits and scale it up. Now, that is a given, because otherwise that could have been a constraint. Then you have the huge advantage of technology. So you said, what next? I would think there will be benefits from intelligently applying technology. I don't want to use the word artificial intelligence, because it could go here and there. And if you hear some stories, you could be worried, because today I think artificial intelligence is getting intelligent. And my definition of intelligence is that is it now able to tell a lie? And I believe that it is now telling lies and getting things done by lying. So that's a dangerous path. So I don't want to say, but sheer use of technology and applications of technology will mean that all existing players, I'm not talking about banks alone, in the financial system will need to be more efficient, and younger, newer startups will drive that efficiency up the. So you will find a banking system or a financial system trying to keep pace with the quick commerce business, because we will also be we are already paperless in most respects. We are almost branchless. We can aim to be ATM less and get everything done on a straight through basis on technology platform. So that's what I see happening today. One important trend that I'll see, maybe you'll cover it separately, is from savers. I think we will see that household help of yours getting to be an investor. I'll tell you a small experiment I did when I heard that there is something called MF Central out there, which is an app done by the two registrars, KFIN and CAMS, which you can download. And if you've got 4 different mutual funds, you just download this app and then put in your PAN number, and all the mutual funds are consolidated, and you get one number, what is your holding value as of today, and of course, you can drill down and do more things. Then I said, this is something that my household help can use. So far, money is lying in the bank, but now they could actually invest for the future and maybe get a higher return, maybe dream. So, and a SIP is again a way where that is possible. So I sat down my 2 people, and one is a 25-year-old person, another maybe late 40s or 45, 46. So, and I explained to them what is a SIP and how much if they saved 5,000 a month, what that amount would be after 25 years. It was well over a crore of rupees. And I gave them the lay of the land, as it were, and how easy. Do you use WhatsApp? Yes. Do you use YouTube? Yes. Then you can use this app. That sort of a dialogue. And then I asked them, do you want to do this? So the young guy jumps up and says, I want to. Because he calculates, I'm 25 now, 25 years later I'm 50, and I got a large corpus. The older guy, who's around 47, 48, says, mujhko sochna padega. That also, he's thinking, I'm 70, the fruits of this, will I be able to enjoy, and so on. So technology is taking us in a variety of ways, not only ease of doing business, the way we save, the type of savings we want, savings to investments, and all this will provide the momentum to this new Bharat that we have, which is looking at Bharat at 2047. You want to put it as a 50 trillion economy, whatever number, but I think it is well within our grasp.
Point taken, sir. In fact, I can tell you, I'm moving with a set of people who have already gone through the SIP and saver to investor mode, our makeup team. And a couple of them are so bright that on a daily basis, they have to keep, on a daily, minutely, hourly, secondly basis, they have to keep watching television. If someone's hair is out of place or, someone needs a puff, they have to be clear. That gentleman has been able to, he looks at all the mutual fund guys who comes, and then he says, why should I give the mutual fund guy that 2% or 1% entry? He has taken down everything that they are investing in. And he says, मैं direct invest करता हूँ, मैं इनको क्यों पैसा दूँ? So people are, learning from the ecosystem. But, we have got another 15 minutes, sir, and now I want to ask both of you gentlemen, what are the travails, the troubles from here to there, from that brave world that all of us are aspiring towards? Mr. Khara, let me start with you. In terms of problems, as I see it, the MFI problems. I mean, up until a year ago, we thought that, this financial inclusion, and we have been recovering from COVID. But MFI has given a cruel blow, saying that much digital information is not available about those people, or someone is ignoring in spite of perhaps knowing. Maybe, 4 loans, 5 loans have been given recklessly. Either it is not financial inclusion, but reckless financial expansion. You're just giving money because some private equity has given you, or we have not yet created the digital footprint to be able to do good due diligence. So what are the troubles you see from here to the last man?
Yeah, what you alluded to in terms of the MFI related problem. Herein also I would like to highlight MFI is one segment addressing the customer group where the NPAs are pretty high. At the same time, the other segment, similar segment, is SHG. In case of SHG, self-help groups, the NPAs are just about 1%. So what has happened is it's a bit of a reckless lending and irresponsible borrowing. Because anybody who is in financial distress, they are willing to borrow from wherever they can. And what you mentioned about 4, 5, actually in some of the cases it is as high as 8. That is one. And secondly, these MFIs are charging exorbitant interest, because when I analyzed this and could figure out that in case of MFIs, their interest actually goes to as high as 30%. Whereas in case of SHG lending, it does not go beyond 12%. So the ability of paying the interest is very, very critical component. And also what you mentioned about the imperfect information relating to their borrowing behavior.
Is data available to...
Actually, there are entities like Equifax, etc. They have mapped the ground level customer base, and this information is available. You know what happened, and actually when there was some relaxation of rules which took place, and they started reckoning the household income. And in the household income, everybody's income got clubbed with the others. Double counting, multiple counting. So that is one of the reasons. So I would say that it is actually attributed to the irresponsible behavior of borrowing and also the reckless lending done by MFIs. So this is something which we need to ensure that we should not allow our people to get into this kind of a debt trap. They're actually into the debt trap today. To get out of this debt trap, perhaps the MFIs will have to reconcile to the fact that they cannot probably settle with 30% kind of an interest rate. They'll have to reduce their interest rate and settle it out. That is one. What you mentioned, I have some thoughts in my mind. There are 3 things which I would like to highlight. One, of course, we as an economy, we need to be much more efficient. And 3 things. One is the capital we have to deploy, because we are a capital deficient economy. We must deploy the capital very efficiently. That is one. The second is the talent. We are doing something in terms of internships, but at the same time, the women workforce, which is almost 50% of the country's population, we must see to it that they are gainfully employed. And we have already seen that in the states, wherever there is a gainful employment of the women workforce, the states are actually much more progressive than the others.
And the defaults are less.
Yes. So that is also there. Third is very important, because when we are talking about the efficiency levers, one of the most important efficiency lever is consuming the AI, which also means that we'll have the supercomputers, and there the power consumption is going to go up multiple times. So there is a need for having an energy efficiency. So unless and until, and more so when we are going for manufacturing in a big way, these are the 3 things to my mind we'll have to actually work on and see to it that we bring in the efficiency lever into making use of capital, making use of talent, making use of energy.
That's a very all-encompassing answer, which actually gives each one is a debate in itself. Thank you very much for that, Mr. Khara. More specific problems I want to tell you, Mr. Kamath, which I didn't expect, because I thought that banks, NBFCs and fintechs are already up there in terms of the digital footprint. It isn't just MFI, where I can assume that, the Reserve Bank in March 22 allowed the rules. They said that, okay, banks don't have a interest rate cap. We won't give you an interest rate cap, because that was the demand. And then the whole logic changed. They started thinking that let us charge 30%. Even if they pay me 4 installments, I'm in. And those who pay me 5, 6, 7, 8 installments, I'm in the money. The whole logic of lending changed, which perhaps is now chastised, and some things will be written off and some things will be recovered. But I was not prepared for the unsecured loan defaults, because there I thought the data was available. They're usually urban loans, two-wheeler loans. Mr. Kamath, are we not employing digitalization properly? How is it that due diligence was not done? Or what went wrong? That's my first question. I have a couple more.
Yeah, I think there's something more than that. It is not that due diligence was not done, or probably due diligence certainly was weak. But nobody bothered to see, what is the end use of this money, even in a broad way. And you hear Reserve Bank very clearly saying, even when the loan appears to be secured, we would like the banks to figure out what is the end use. And let me put the context, because I have understood the context of why they are saying this and what is probably the reason for this failure. The first sign that something was not right was when I heard a statement from SEBI a year back that about 90-95% of people who have dealt in the F&O market have lost money.
Yes, you put your fingers.
So I asked a colleague of mine, now I want some back working on this, figure out the number of people and figure out, more importantly, the amount that has been lost. What is 90% loss equal to in rupees crores? The number he gave me was 1.35 lakh crores. I then, in a way, talked it over with the SEBI. They said that has to be grossed up, and the amount actually will be around 1.75 lakh crores. Now, then you have your hypothesis is that who are the borrowers? This is not the older people who are to F&O. This is a cohort of people in their early 20s, maybe right up to 30. So this mass has seen the bug of the so-called bug of quick money, and there are enough, I would say, places where they could see this, whether it was on YouTube, whether it's other social media, and then there were fraudsters driving this. So it is a combination of, I would say, greed, which always drives things, driven by fraudsters, which amounted to this money. So
enabled by technology.
To me, this was the key place where there has been losses. Add to that the MFI challenge that you said, then you have got a larger number. Now, where has this been? Where is this, and when will it be accounted for? I have no answers. But the fact that the regulator has gotten on top of that in a way by introducing risk weightage and understanding, now it is not usurious lending. You are lending at rates which are supposedly...
This is not usurious. This is end user.
No. This is, I am in a way sarcastically saying it. But it is a usurious ROE. But it is not usurious because you are not going to earn that ROE. The ROE appears 30% or rate of interest, but end of the day you allow for credit losses, it is probably 1 or 2%. But somewhere, if you are a banker, you would ask a question, if my client is going to borrow at 35-36%, how is he going to repay? What does he earn and how does he repay? And moment you find that that answer is not there, then you have a challenge. And let me put that into context. Mr. Khara explained that a big market was, lending to the street people. Street vendors, I learned my first, that's a viable, it's a viable business at what would appear ultra high usurious rates. This I first saw in Philippines. And the lenders were from our country. They had actually got a lending market. And what was the lending model? It used to be called in the Philippines 5-6. Now 5-6 can be 5-6, can be 50-60, it can be 500-600. So what is 5-6? Or let's say 50-60. You borrow 50 in the morning and you collect 60 in the evening. Collect. This is not rolled over. Collect 60 in the evening. So it's a street vendor who goes and buys whatever he has to sell for 50. He sells and makes maybe 90 or 100 and repays 60. Next morning the cycle starts. So there is a viable model here, and we'll say intermediation cost is high, but it is sustainable because for him, he makes money on this. But if you borrow on a 5-6 basis or a 50-60 basis and gamble, you're not going to make money. So answer to your question is that exuberance has to be curtailed by the lender, and that exuberance also your client has to understand is not sustainable. Then we will succeed. Otherwise, we'll fail.
Yeah, digitalization can take you that far. After that, you have to have due diligence and ethics in lending. Mr. Khara, now beyond that, we are into the last 4 minutes. There were some genuine problems, which I don't know, it's not exactly this forum's problem, but one of the reasons why the MFI problem, one of the reasons is the extreme heat. I mean, there was mass resignations among the MFIs, and I spoke to both the SROs, MFIN and Sadhan, and both of them said the same thing, mass resignations of people doing the weekly collection, because you couldn't go out in that heat. And then again in August, in the July, August, September quarter, the problem was extreme rains. So I wanted to ask both of you if climate is something we have to, think about a little more seriously, as, whether you put it as likely provisioning or whether potential growth has to be adjusted. I don't know, but it seems to be becoming a factor across the board. We talk a lot about digitalization, but perhaps we have to give a little bit of thought and how it has to be accounted for, provided for. Is it capital, risk weight? I don't know. But a word on that. And another word on rising incomes. I mean, the kind of urban incomes, and we had an excellent paper which Indian Express reported on, that the rate of growth of formal sector jobs, the salary growth was a maximum of 5% over 5 years. I mean, the CEA started appealing to the conscience of corporate India to say that it is in your interest to pay better so that there will be a demand for your own goods. But maybe on a larger scale, are incomes and jobs rising enough? And will not that be as important for financial inclusion? Both those to both of you, but Mr. Khara, you start.
Well, of
Climate
course,
and incomes.
I fully agree with you. The climate risk is something which cannot be lost sight of. And of course, what you mentioned in terms of the recovery, but nevertheless, otherwise also, the kind of floods which you get to see and the kind of the weather adversities which actually impact the economic activity overall, and then of course it also impact the productivity of the entities. So I think that is one of the very important aspect. And while we have actually at State Bank of India, we have already developed a matrix to evaluate the compliance of various corporates in terms of the ESG norms. And as of now, it is we were not using it for deciding the interest rate, but we started educating the customers about what is their ESG ranking. So, but yes, of course, we have raised various green loans, and we need to extend it to only for the green purposes also. This is a felt need. I think this cannot be ignored. The amount required is phenomenal, beyond imagination. And as of now, the sources are very limited. So I think this is a real area which we need to work on. But we were, in fact, I'm happy that at least regulator has also started thinking in terms of it. And I'm sure in due course, there will be some kind of a guidance for the industry as a whole. So which will probably also push the corporates to ensure the compliance with the governance norms or the green norms. What you talked about, the MFI related collection effort, I think it is, if at all had there been a responsible borrowing, perhaps this collection effort would not have come in the way. And those who have to repay, they will repay. They know that there is an obligation on their head. So that's what my sense is about this particular aspect.
Out of time, so I'll ask you more to speak about, whether income growth and job growth is becoming the obstruction to financial inclusion, at least the very slow pace of salary growth, even in the formal sector. And that was seen as the reason for lower urban consumption
I think,
in the last 2 quarters.
we-
I'm just asking you whether that will be that will thwart financial inclusion.
Yeah, I'm conscious of 26 seconds. My short answer is that more data is needed. I think at the aggregate level, is this a number or is it at the individual worker level? Because there has been a whole lot of things that have happened. Take corporate India, for example. Senior people have retired, senior people left, younger people have come, the wages down. So it depends on what and how you, what cross-section you looked at. I really don't have data. But since it is on the table, one should analyze it. But I think everything, when you look at the journey that we have, a 25-year runway to do things that we have to do, I think all these get resolved as we go along. You have clean corporates, you have clean balance sheets, you got young, youthful people. I don't think anybody can stop Bharat. So,
actually, that's beautifully summed up. The last sentence was India is unstoppable at the pace at which we are. I won't take any more time to wrap up. Thank you very much. And it is over to you, Lisa.
Thank you for a very, very informative session. And I also now open the session for Q&A. We have 10 minutes to ask questions to our esteemed panelists, and I request the volunteers to hand over the mics and move around where you see a raise of the hand.
Good afternoon, sir. Two stalwarts are there from a private bank and from a PSU bank. So I just want to know basically how we can reduce the experience of a customer from a private bank to a PSU bank. If you go to a PSU branch, if you go to a private bank branch, how you all two are stalwarts in those two different bankings. So how can we reduce the experience? We go in the private bank, we get a very good experience. A PSU bank branch, I'm talking about branch level. So how we can get a this reduce? Thank you.
Well, when it comes to the customer experience, I think various initiatives are being taken, and the message is always reinforced in terms of improving the customer experience. So this is something which is being done, and of late we had started doing some kind of a net promoter score survey also, and we have seen a definite improvement. But it is always a journey, it's not a destination. But at the same time, some of the experiences which I learned about the private sector banks also, if at all there is a routine transaction, it's fine. But if at all you have got some complex questions, then everything is referred to the call centers. So I think there are pluses and the minuses, both sides. But yes, of course, as a commercial organization, it is always our endeavor to ensure that the customer experience remains one of the major focus area for not only for those who are in branches, but everybody in the organization.
Well, I have to intervene, sir, both in terms of a customer and in terms of a reporter. There are private banks and private banks. There are public sector banks and public sector banks. I think this categorization is not working. And there are people and people. There are sensitive people across the board. I know one private sector banker, when one of my cousins had to open an account, he stays abroad, but for some reason he had to open an account here for transfer of some money. He was told, I won't open your account till you open an insurance with me. That is the law. What bloody law is that? And now you know how the insurance and the bank insurance guys are after them. So, I mean, I think there are all sorts of good and ambitious and aggressive people in all categories.
We have a raise of hands amongst the young people at the back. So,
Namaste. Namaste, my name is Abhishek. I'm from HDFC Bank. My question is to the esteemed panel. One of the key challenges we face in the banking industry is about acquisition of new to credit customers, especially in the retail segment. So how do you kind of advise on overcoming that? Because across spectrum, whether it's a private or a PSU bank, this always has been a very, very a big pain point. That's for the retail segment. That's also for the agri lending segment also.
I didn't catch the question.
New to credit customers.
Yeah, I think
it's always a problem catching them.
I think the customer is these days getting smarter than what we think. It is a question of all the things that we have done. It's a question of educating the customer. And I'm saying it from my experience looking at digital going back 35 years when we rolled out. That everybody would say that, but the customer won't use digital channels. So, and then the customer taught us differently. The customer was willing to use. So again, new to credit, we'll have to explain to the customer do's, don'ts, and how to do it. And he's seeing people around. So I think very quickly he will adapt and learn. I see it as our customer is getting to be very savvy.
Please frame quick questions.
Yeah. My father was a banker who retired from a regional rural bank. My wife is also a banker who works for a old generation private sector bank. Now, I have a couple of questions. One is, we believe that bank employees are overworked and underpaid. When is the 5-day working policy going to be implemented for the banking sector? A. And then B, you mentioned about collecting money from the customers at lower rate of interest. But when I am a asset customer, I go to one set of banks. When I am a liability customer, I go to other set of banks. So how are you going to remove this asymmetry of the consumer behavior?
I'll attempt your question quickly. The first thing is, the balance of working hours, pay, and 5-day working week. I think today we are already there. If you ask me, technology has made it possible to get it right. But if it is not, then it is a particular bank, their approach. And if it's by policy, then policy needs to be and probably will be considered, because technology today is everything is available 24/7. So what is the need for a physical branch to be open long hours and that? And I'm coming from a point of view where we used to keep our branches open 8 to 8 because we didn't have the number of branches and we had to serve customers. We ran the branch in 2 shifts. But from there, I am saying you come to a situation where you probably don't need too many branches. So the second point is again inefficiency of whichever bank that you are talking of. It should not be that you talk to a different set of people to talk about credit, deposits, and different products that a bank has got. And that, I think, is a challenge banks have to overcome. That is, have a single view of you as the customer and have a single set of people deal with you rather than you having to deal with multiple. I think that's happening in some banks, but it will have to happen. Otherwise, competition will, decide where the customer will go.